Now it's time to put together your trading plan. I'm going to speak to you about the psychological aspects of the trading plan. Grab your pen, your paper. As I said, this is where you're going to take notes, rewatch this video. This is important. This is the foundation. If you're brand new and you don't have a trading plan yet, write this down. If you're new, well, not new. If you have a trading plan, even if you're profitable, write this shit down. You'll be more profitable. When I was profitable, I went back. I have tons of these notebooks, tons of these notebooks, and I read all my old notes. And this is one of the things, the trading plans. This is back in the day, where at the end of the trading plan, you put your name and you say, I, Shiva Discipline, promise to only follow this trading plan, etc., etc. We're different now. But this is what should be on your trading plan. One, it's your trading plan. So you have to name it. It's a psychological thing to name your trading plan. It gives you the identity with it. It belongs to you now. You met a mentor. Mentor's name is John. It's just John. John teaches you to trade a strategy. Let's call it a breakout strategy. But when you backtested this strategy, most of you will not see the same things that John saw. You will see little nuances that John didn't tell you in all of his videos, but this is what works for you. These now are things that are part of your strategy. This is why the testing is important. After you've done the hours of backtesting, the analyzing, forward testing, which is don't even take an entry. You're going to mark it up with your stop loss take profit tool and just watch it. When it's finished, screenshot it, log it, or just write it down. You don't have to go too much effort, depending on how seasoned you are. When you're finished with that part, it's yours now. It's not John's anymore. So put a title on there. And with some of my clients, I do these intensive one-on-ones where traders that make money. They make money and they're just sick and that they didn't follow their plan and they don't know why. They leave money on the table. It's usually one or two psychological things, but we go really deep and we surgically fix it. Right? But one of the things I tell them is, what's the name of your trading plan? And they'll say, my mentor this, my this or that. I don't have a name. So name your trading plan. Put that big at the top of the paper. The next thing you're going to do is choose your session. And if you don't know what a session is, yes, there's New York session. Yes, there's London session. These are the times of the trading markets opening, things of that sort. But I'm talking about you, your session. What times can you trade? Don't try to trade London session 3 in the morning if you live on the East Coast and in 3 in the morning you're sleeping. You're going to be miserable. Your psychology is going to be off. Fuck the session. It's crazy, but it took me years to find this out. Waking up with alarms, and for those of you who know, when you first start training discipline, you're setting multiple alarms. If I hear someone says they have like 10 alarms and they don't get up, that's not a disciplined person. You might start with 10 to train yourself, but there has to be a point where maybe 2 alarms, 1 alarm, then you get to a point where you don't even need your alarm. You just wake up. Shit, you wake up 5 minutes, 10 minutes before your alarm. You say, fuck it, I'm gonna get up. These are the stages you're going to know you're accountable, and you're definitely going to know on your P&L because you're going to be profitable. But this is what it takes. So your session is what's for you. Personally, I trade 25-minute sessions, and I trade about 2 or 3 of those a day. Market conditions are a thing. We'll talk a little bit about market conditions. But for sessions, if you put the session that's there, you'll know the time to backtest, and you're not backtesting every goddamn entry. I recommend sessions where we have volume, if you can catch it. New York session, London session, I think China session is a thing. The Asian session is a thing. There you go. Some people trade it. I don't have experience with it, but there is volume there. Do your back test. So now you have your sessions. You're going to write that down. You're not going to trade anything but that. You're also not going to back test anything but that. That's the secret part here. Don't even, it's like, let's say you got 3 sessions. You have three checks. So the men out there, you have 3 checks. Don't go after more. You chose 3. They agreed to each other, right? For any ladies, right? They agreed to each other. Don't go looking for 4. Don't question 5. Don't do anything. Of course, if 3 is not working out, you need to simplify it to 2. If you need to go as far as having one, which I recommend to all new traders or all traders that are blowing accounts constantly, stick to one session. But to my advanced guys listening, I have a few guys here listening that you told me to be on here. I see you're on here. You guys taught me how to trade. You know how we do, guys. No more than 3 sessions. It's too much. Everyone talks psychology, but no one really talks psychology. They just gloss it over. I really talk psychology. We have something called a psychological bank. If you know a fancier term, let me know. But I consider your psychological bank how much you can handle when you're in a trade. Patience, that's a different type of psychological bank that's prior to a trade, right? You're going to have to wait. You have your trading strategy. That's the whole the point of this conversation we're having right now. And you're waiting. And you see some things, the candle went and you know you got to wait for a pullback. The candle just bulls, but you need to wait. That's what you told yourself. That's your strategy. But you want to go in. So patience. Good job. But now you entered because your strategy hit. Let's say you got an entry. You're in now. This psychological bank is being burned 5 times faster minimum, in my personal opinion, giving that number, throwing the number out there. If you think it's more, let me know. Than the psychological bank of waiting for a trade. FOMO's the beginning part. That's easy. Fear of missing out, that's easy. You just want to jump in. But if you have the strategy, you did the work, now you want to enter. You know you got something here that can make you money. And then you entered. And everything you knew to give you that confidence that you could make money just went out the fucking window. Because now you see it's moving up. And there's something about, if you're using MetaTrader still, like MetaTrader 4, I think we're up to MetaTrader 5 now. Something about that blue. Like, right, look at my profile, that blue. It's a beautiful blue. It sparks you. It gets you going. You want to see that profit go up, right? It's green now. If you're trading futures, I trade futures, it's green. And it just come down a little bit. Boom. You want to close right away. We're not going to do that. We're going to hold our trade. We're going to hold ourselves accountable to what we said. All right? Okay. So you have your sessions. Now, this one here, after this one, if you have to go, you can cut off this video. This is the number one thing. This is what explodes all traders. If you disagree, you're lying. It's this serious. You need to identify on your trading plan your risk amount. You need to identify on your trading plan your risk amount. This is very important. I don't just mean your stop loss size, the dollar amount as well. And you need to be aware of both of these things at the same time, all the time, always. There are many great setups that when you draw it up, you will figure out the stop loss is too big or the risk amount is too big. Guys, just stay out the fucking trade. Do yourself the favor and just stay out. It's not worth it. So make sure you put your risk amount on there. Have a max daily amount. If it hits this number for losses, you're done. You're done for the day. And make that a denomination, like a dollar amount. Then you're going to have a max stop loss amount. I know this sounds crazy, but once you backtest your data, you're going to have to go look for what's your average stop loss. Your average stop loss is important because if it becomes bigger than you're used to, you're going to get scared. And you're just going to want to leave the account. You're not going to want to jump in the trade. You're going to want to leave the trade if you're in the trade with a little bit of profit. So know your stop loss account, your stop loss amount. You like tick size, pips, whatever you trade. The third thing, and I highly recommend this, have a stop out rule. Some people are 2 trades, some people are 3 trades, some people are 1 trade and done. Backtest, this is based on your data. You should know how many trades in a day you will lose on a losing day. And then you divide your total max out by that. And then you're done. Treat it like tokens or markers. There was a time I had little Hot Wheel cars, right? I have kids. I had a little Hot Wheel car on my desk. It was like a Batman one and like two others. And each trade, like if I give myself 3 trades for the day, I had 3 cars. And when I finished an entry, I drove it away. These are just beginner trader trading things in order to give you the discipline. And this still stems from accountability, because this trading plan is what's going to hold you accountable. We'll talk about a little bit about that in a moment. So remember, guys, go ahead, your risk amount. That's very important. Now, you have your risk amount. Don't change that because you think the market's moving. You told yourself you're going to risk 250 on a trade. Don't go ahead and risk more than that, because all of a sudden you get the math. You say, you know what, maybe if I risk 300, maybe 350, that extra 100, if I'm doing a 1-to-5 ratio, that's 500 extra. Don't do that. That's greed. You don't realize it's greed until after the fact. It's going to destroy your account. It's going to destroy your mind. You're not going to know if you are a good trader even. You're going to question everything. The second thing, you've lost. And it can be painful till you understand you have to lose. If you don't lose, you're not going to make money in this game. You have to lose. It's part of probabilities. If you think you're going to get every trade right, that's another decision to quit trading right now. Let me say that one more time for you guys out there. If you think you're going to get every single trade right, quit trading right now. And this applies to real life. If you think everything, if you're one of those people that don't do anything because you're so nervous, can I do this? Am I going to be able to do it right? What if I fuck up? What if I this, that? What if? Ban the term what if, unless you're going to purposely have the power to make it a positive thing. And that takes mental conditioning in the world that we live in. And once you're there, it's a superpower. But ban what if when it comes to trading. I know everyone says, what if it goes here, then it can go there and all of that. That's what we're doing with the trading plan. And once you have it locked in, there's no more what if. All right? So you got the risk part down. And these notes here so I didn't miss anything. All right. So now, after you finish writing your risk down and go into detail originally with all of these things, you'll condense it later. But once you're writing, just write. Make your plan. If you are a typer, type, but go into detail. Please go into your mind. Trust yourself. Read later what you wrote, especially if you've been in trading for a while, a couple of years, you're trying to really get your shit together because you're still not profitable yet. Reread your handwritten notes, reread your old notes, read them out loud, listen to yourself, make videos of you reading them to yourself. It sounds silly to a point, but you'll be amazed at the little gems you'll pick up that you forgot, especially if you've been in the game for a while. I don't deal, like when I do my one-on-ones, I don't deal with newbie traders, especially for the price. I charge $5,500 for my one-on-one. And I say it like that, $5,500, $5,500. So I'm not dealing with newbie traders. There's tons of people that'll go ahead and teach you how to trade, but there's a level of psychological, I don't even want to use the word awareness. It's accountability. There's a psychological realness with yourself. You trust yourself that you're going to do what you said you're going to do. And this is where all your technical mentors come in. This is your entries. So the next thing on your trading plan is going to be entries. And I'm probably never going to make a trading plan video ever again. I didn't plan on going this long, but I'm giving you guys a lot of good information here. If you watch this video and you really don't know these fundamentals after that, you're just fucking lazy and you didn't watch the video. You're like, I'm not gonna listen to what Shiva said. I'm just gonna leave. He doesn't know what he's talking about. What the hell does making my bed have to do with trading anyway? That's okay. Remember, once again, this title just came to me. Make the decision to quit trading right now. I'm giving you all the reasons. If you can't do these things, it's okay. Go do something else. You'll probably be successful in it. But when it comes to your entries now on your trading plan, you're going to write down what your entry rules are. Really precise things. You're going to go into detail. Here, let's give an example. There's a certain candle pattern. I really try not to be specific or give any type of technical information, because I don't want to put that bug into people's head, into people's ears, into people's mind. But let's be simple. If you have a certain type of trading candle pattern that is a reason for an entry for you, you're going to write that. That's your entry reason. On top of every other thing needed before you do it. Some people say, I think it's called confluence. I don't know if they call it anything else. What would that mean? if you use an indicator, for example, you use this in combination with this candle pattern, and let's keep it simple. Let's say it's that. Well, only when those two things happen will you go ahead and enter. And I know it's going to be more than two things, but I'm not trying to overwhelm any new people listening. So you will talk to your mentor. You will have entry reasons. And even your mentors that are teaching you technicals, write notes. I don't know if they tell you guys write notes. My mentors tell me just take a notepad and write notes. Write notes. Take notes. Trust me, you want these notes. Everything about entry. Why? So when you go sit to write your trading plan, you have it all. It's just going to come to you. Take a few breaths when you do this trading plan. Sit down for like 2 hours. A real trading plan will take you almost 2 hours to write. The first time, the correct way. You can later use AI to, like, whatever you use, ChatGPT, Cloud, Grok, whatever, to condense it, bullet it, make it look nice and all that for every day for quick view. But when you're making it, give it time, give it attention, give it the same attention you would give a loved one. Give it the attention you deserve to give yourself, because this thing, these are your rules, right? So your entry reasons, that's the next thing. Now, the most important one was risk. The second most important thing are exits, right? So far, summarize this real quick. We have, you're going to write your session, your risk amount and your risk rules, your entries, that's reasons and things of that sort. And now we're at exits. This is the part where you're going to write it. If you type it, put it one font up more. So if you write everything in 12, put this at a 14 or a 16. Exit reasons. Most important part after you're in the trade. Before the trade, the most important part you need to figure out is your risk amount. Entries come natural. By the time you finish 100 entries on backtesting, you know your entry. If you don't know your entry, throw in another 25 on backtest. You'll be okay. But when it comes to exit reasons, you need to know those down pat. Make them simple. I'm going to give you my exit reasons. I get a lot of shade from this. I have traders that tell me I'm crazy. Either that trade will hit stop loss, and I start with stop loss first because I've accepted my risk, or it will hit full take profit. That's it. I don't do break even. I refuse to do break even. I'll give you a little sauce. If the people say sauce, I'll give you some sauce for what I usually give people that pay me. Ready? Whatever your break even is, set that shit to your fucking TP. I'll say it one more time. Whatever your break even is, set that to your TP. That's your max. If the moment the price hits something, your heart goes like this, your heart starts beating, and you want to go ahead and stop, then get out. Just get out. This is crazy advice. I don't take this literally past planning and trade, like designing your trading plan. But I heard someone once say, if you're in a trade, especially when you're trading with big numbers, I have some friends, they trade with 6-figure plus accounts, and the number's too high, just close the fucking trade. Just close the trade. If it feels too much, close the trade. So to avoid that happening over and over, right? You get into a trade, you feel, you cut. You get into a trade, you feel, you cut. We're going to design the plan that wherever you would sit and sit your take profit, or you move your stop loss up in order to create a break even. That's your full TP. A little more simpler. If you set break even at a 1 to 3, just fully close at a 1 to 3. Just fully close. If you really need to make more money and it's within your risk parameters, like 5%, risk a little more. If not, just accept it. It'll compound and build. After a few winning trades, you'll have enough capital to make the more money amount. We shouldn't even focus on amount per money. It should be percentage or risk to reward ratio. So your exit reasons are important. You're going to write these things down. Why? When you want to exit your trade after you're in it, you need something to reference. That's it. It sounds simple. We all know this. But once you're in the trade, all this knowing thing goes away if you're not aware. This is why I speak a lot about consciousness. I speak a lot about awareness, observing the thoughts, observing the emotions, separating from them, realizing I am not the thought. I'm almost done working on some mind training videos. that literally teach these things, because the superpower is you see things for what they are, things that you can use or not use. You can exit for all the reasons the chart's telling you that you see, or you can exit for the reasons you wrote down on your trading plan. So write down your exit reasons, and you will not close your trade for anything but these reasons once you're in the trade. That is very, very important. So now you have your entries, your exits. We're going to have some final rules on here. Some final rules on your trading plan. These are going to be the rules of, is there any specific news days you won't trade? Right? So personally, I don't trade CPI. And on certain days, I won't trade 9 o'clock session. I'll trade later in the day. Those rules, I write those down. So whatever rules you have that's different from your entry and exit, that has to do with market conditions, that's what you're going to write here. And when I say market conditions, this is what this part is for. Market conditions. It allows you to, and now we're going a little advanced, right? So let's summarize it up for the beginners, the people starting to create trading plans just to get their feet wet, and then we'll go a little advanced with market conditions. So make sure you have your session. Well, so most importantly, to start, for your trading plan, make sure you have the title linking it to you. So your name, your trading plan. Then make sure you have the session, the risk, the entries, the exits, and then any of the one-off rules that you need. Okay? These rules could be anything that you saw while you were backtesting, and then you tested it and saw, okay, that helps you. And it's a little different from your mentor. Now, that is one trading plan. Most of you that start trading will trade with the trend. You are a trend trader. If it goes up, you buy. If it goes down, you sell. Trend trading. The market condition will be we need higher highs and lower lows for the trend. That's the most technical, that's market structure. That's the most technical I'm going to talk to you about. Now, those of you that are advanced a little more, you can trade ranges. Ranges are a little more complicated. Ranges are a little more complicated to the psyche, because there is a little more manipulation, there's a little more fake outs, but it is tradable. And I recommend, if you're a brand new trader and you're learning a strategy of trading ranges, keep that as a second strategy and force yourself. Like create the mental discipline to do things that you really don't want to do. Force yourself to go learn a trend trading strategy. It's going to save you. It's going to make you way more money. It's going to help you survive mentally and financially during losses. Sometimes you'll just have loss streaks. If anyone tells me they've never experienced a 10-loss streak, you need to trade a little more. You're lying about your percentage. You're not profitable. They're just showing you wins. Make sure they show you losses as well. But you need to be able to prepare for a massive losing streak. So if you have your strategy for the trend, now you're going to go ahead and you're going to make a second strategy for ranging. This is your second strategy now. This is your second trading plan. You need to go back to the beginning, risk amount, session, entry, exits, everything you just did for this second trading plan. This is very important. You need to have, let's say you said you will take 20 trades per strategy. The first one, 20 trades. Now you need another 20 set of trades for your second strategy. That means the account needs to handle 40 trades before, like, losing back to back to back, before you completely lose the account. I know this sounds crazy meticulous. I know this sounds like, when is the money ever going to come? This helps you when the money comes not to give it back. Once again, this helps when the money comes to not give it back. This level of structure is what kept me profitable. Making me profitable was getting a mentor, doing the back testings of that sort. But keeping me profitable, making me not change my strategy during hard times, elections, wars, whatever you want to say it was, recession, using the same strategy, trusting myself, it takes this level of work and this level of accountability. And if you're still watching with me at this point, you can do it too. I really, really think you can. Or else I wouldn't even be putting this effort to make this video. That's me being completely honest with you. This is for free. So know your market conditions. And the last condition, I think we can all agree with, consolidation. Not ranging, consolidation. Guys, I'm talking wicks. It looks like, I call it chopsticks. No disrespect to anyone. I call it chopsticks. It's wick, consolidation. It's a box. Nothing's going anywhere. If you have used an EMA, it's going right through it. I recommend everyone just put, especially if you're new, just don't trade these. Put it on your chart, on your trading plan. Do not trade consolidation. These are very important. These are the little extra rules that you add. These are little extra things that keep you knowing to stop making bad decisions. It's like having a sticker on your car steering wheel that says, "Don't drive if you drank alcohol." And you're gonna look at it every time you go ahead to drive because you want to drive with alcohol because you think you're a better driver, but you shouldn't do that. That's exactly what your trading plan is. When you're about to go make bad decisions, you're gonna rely on your trading plan to save you. And that means the only person that is saving you is you because it's your trading plan. And that's good because the only person that you need saving from is yourself. And that's what the trading plan does. So to summarize the trading plan, we have our session, the risk, the entries, the exits, any rules that you need, and any little memos or quotes or anything that you need to tell yourself. Always have a quote at the end. A quote that I like to give is, "My P&L does not define me." Another one is, and this sounds crazy, "There is no right and wrong in trading. There is only proper execution." And the last one, and this is the one when you've done everything right, you followed your trading plan to the T, and these are my advanced guys. These are the guys that reach out to me. Reach out to me, Connect, anywhere. DM me anywhere. These are the guys that do everything right. I'll make a video about traders' depression in the future. I take that very seriously. These are the guys that have pushed it to the end. When you've done everything right, and you still lose the trade. Remember, anything can happen in trading. Anything can happen in trading. Write that one down. That means it's not, if you've done everything right, only then can you say it's not your fault and still be accountable. But it requires figuring out what is right, planning for that, and getting that done.